Welcome back. Gopal Mahadevan, the CFO at Ashok Leyland, is joining us this morning to discuss, the quarter gone by. It's been a pretty solid quarter and really what's in the offing going forward. Mr. Mahadevan, great to have you with us. With the kind of recovery that you've seen in the domestic market, what are the projections now for FY22? And how will you also work towards regaining some of the market share that's been lost?
Well, I think this was a very all-encompassing question, but let me, kind of attempt to answer it. As far as FY22 growth is concerned, I think a lot is going to depend on the opening up of the lockdown. We are encouraged by what the government has been doing now, and hopefully, this opening up will continue. If that happens, I think we will see the demand coming up. This is exactly what happened last year as well. If you notice, Q1 and Q2 were pretty much washed out, but you could see that in Q3 and Q4, we could see, especially in Q4, the total industry volume grew quite phenomenally, and that's how we were also able to kind of grow as much. Of course, we continued to grow our shares, which was extremely low in Q1 because the lockdown was kind of unfavorable towards us as we were located down south. But then we kind of quickly caught up in Q3 and Q4. So for us, I think if the lockdown, for the industry itself, if the lockdown were to be kind of eased out methodically, we should see quite a bit of growth in the second half. So we are positive about it. The second one is, even with the revised growth rate that has been forecasted of 9.5%, I think it should augur well for the industry because the whole economy has been pretty much buttoned down for quite a while. And we should see, the manufacturing sectors also opening up. As far as our plans for the current year or the future is concerned, we will continue to ensure that, we have the new products that we have launched last year, which is Avatar and Bada Dost. They make deeper penetration. They have been very well received by the by the customer community. They found that Avatar has got a best-in-class fuel efficiency or fluid efficiency, as we call it, and Bada Dost has actually been also recognized as the commercial vehicle of the year. We will continue to monitor our costs. This is something that we have been doing over the last 5 to 6 years, and we will continue to do that, watch our working capital, but at the same time, want to ensure that, we don't miss opportunities for growth. Digital is another very large initiative that the company has taken. So this is not just, for this self or speak, but we are saying, how do we use digital in every aspect of the business, not only to build productivity, but also to reach out to customers more efficiently.
Okay. Are these margins sustainable? Your peers are probably doing a little better in terms of margins. So do you see yourself catching up to those numbers soon?
How we have grown in revenues, how we have grown in market share, and how we have grown in margins, and how we have kept our capital employed, including our working capital intact, all at the same time. So we aren't going to change basically the tone and tenor of that performance. I think a lot of these margins also depends, first of all, on your location. The second one is also on the mix of the products that we sell. So I think as we move forward, you are going to see that LCV is becoming a very important portfolio, and LCV margins are, definitely above the mean. And we are looking at further growth in this business. This is not to say that MHCV is not important. MHCV is a very crucial segment for us. It is the one that has been actually accounting for nearly 65% of the revenues of the company, and we will be happy to see that getting into that level as we move forward once the economy starts to open up. The focus is not just on purely margins for the sake of cost or just increasing prices. It's about productivity. How do we do the same thing more efficiently at a lesser cost, but with much more reach to the customer? See, ultimately, while it may sound very wholesome, our aspiration and our goal is to be in the global top 10 in commercial vehicle manufacturers. So we will do everything that it takes to reach there, including investing further into exports, growing the other businesses which have done exceedingly well. The compliments to the team, if you look at it, our aftermarket has been doing record numbers. So has our Power Solutions business. And of course, our defense business also. So our idea is two or three pronged. One is to keep, getting the reach of the existing businesses, keep introducing products, and also grow the non-MHCV business and step up their revenues as well.
Right.
Wanted to understand how is it that going forward your product pipeline is looking like, and what are the new launches which are lined up?
I think, see, the big launches have happened last year, which is, the Avatar range of products, which was for, not only for BS6, but also the modular trucks that we're building. We possibly are the fully modular manufacturer in India for commercial vehicles. And then the second one was Bada Dost, which was into a new segment by itself. So these are two very large launches. But what we have been doing over the past, if you look at it from 2013 onwards or even earlier, has been that we don't make these huge launches of particular ranges. What we do is we launch variants which will help to fill in slots in the products. So we will continue to do that. We will keep tweaking with the tonnage. We will keep tweaking with the torque of the vehicle, the application. We call it as hub, application, and segment. So we will continue to keep doing that, because as customers' needs changes, we also need to ensure that products are launched for those meeting those changes, and those variants will keep is what we will continue to do. And we believe that with these two products which are there in LCV, which is Dost and now Bada Dost, I think a share of customer will start to grow significantly as we plan to reach out to the rest of India as well. Today, possibly, the advantage and disadvantage of LCV is that we are more south focused. Now, the opportunity lies there that as we actually go on a pan-India basis, we actually will see significantly higher volumes coming out of it, and that is also the plan. And of course, the third one is international. International is going to be crucial. Where we are today, we are well positioned, much better positioned than we have been maybe 5 years ago, because we have the right type of products in the range, both LHT and RHT. And that should help us to scale up international as well. Once the international markets open up. But the key to all of this, the key to margins, the key to growth is going to be the opening up of the economy. If we actually start growing revenues, the team is very confident that the operating leverage will kick in and the margins will improve.
Gopal, you took a price hike in the third quarter as well as the fourth quarter. Wanted to understand how the prices trajectory, and more importantly, how the raw material cost pressure trajectory is going to pan out in the near term.
Our expectation and our hope is that, the steel price hikes will start to cool off in the second half of the year. Hopefully, if that happens, that will ease the pressure on commodity cost on commercial vehicles. If costs increase, we'll have no other choice. But at the same time, let me assure you that we would not want to, defocus on growth and market share. What we would focus on is to grow, continue to grow, and try to grow the share of the business, even as we try to grow it profitably. So this should be the mantra of Leyland as we move forward. And one way to look at it is to raise prices. The second one is to take out unwanted costs in the product or in the operations. That's another way you keep neutralizing inflation. So we are working on both sides to ensure that, we are able to improve the margins as well.
So, Mr. Mahadevan, what is going to be the growth strategy when it comes to the export markets? Which are the markets that are going to be on the company's focus list? And do you think we can expect to see more launches happening here?
We will continue to launch products in the export markets, you're right. And I think as the export markets start to improve in the terms of opening up, we are well positioned to capture it, whether it is in Middle East or in Africa or in other parts of the world, including Sri Lanka, Bangladesh, Nepal. These are very important countries for us. And, as I mentioned earlier, and I don't want to repeat it, I think we have the right products today to address these markets. What we are also working on is actually deepening and widening the network. So we are ensuring that, we have the necessary reach in these markets to kind of roll out the products. So you will hear more about us on the exports front as we move into the year.
Okay. And what about the CapEx as well as your investment outlook for FY22? What's slated?
Well, I think we have been pretty tight on the capex. Last year itself, it was hardly about 620 or 630 crores. This year, again, what we have kind of shared with others is that we possibly would invest about 750 crores in capex. We will tell you the number as we, come to the end of the year. Predominantly, it is going to be on debottlenecking of certain facilities. Some, investments, also additional investments in LCV to actually ramp up the volumes. Some investments into safety and productivity, and it's a pretty large company, so it's spread across several plants. So we need to ensure that these plants stay productive, and we will need to do some residual capex also in the Avatar range. So we will continue to do that, and but we continue to, let me state this way, we are continuing to hem in the capex very tightly, monitoring it very, very closely, and we'll share the numbers with you at the end of the year. But at the moment, it looks like about 750 crores.
Okay.
How cautious are you with regards to reports of the third wave and the Delta variant also being reported?
So, what we are planning for, what we're doing is, like I said, two-pronged. The first one is readying ourselves for growth. So if growth happens, we need to be able to address that and feed that growth, and also kind of ride on that growth. But if that does not happen, and if there is unfortunately, there is a third wave which kind of impacts our economy or the globe, then we also need to be sure that, our cash burn and our costs are kept to the as minimum a level as possible, which is what is also happening. So, we are in a unique situation where we need to deploy resources and people very, very judiciously. And that's exactly what I'm doing, or what we are doing.
All right. How do you see the digital shift and focus helping the company as well? The EV shift that's being witnessed. How are you planning to cater to the EV demand going forward?
I think digital is we are looking at digital in multiple ways. First one is, how do we reach the customer more efficiently? The second one is, how does the customer make use of digital to run their operations efficiently? So, we have apps now. I think one is called as Driver Sathi, where the customer and the customer's driver, by using an app, can actually improve their productivity. There's a lot of work that has gone inside. The third one is actually to improve the quality of the vehicles and the uptime of the vehicles for the customer, which means we are able to track each of these vehicles, and we are able to see where they are. It's not just a track and trace. It's not just a long lat or lat long, as they call it. But more than that, we are also able to see the performance of key indices of the vehicle, and also help the customer, stating that this is what is happening with your vehicle in an overall in an overall performance parameter. This is the routes in which it is done well. So there's a lot of data that we're able to feed in. The fourth one is, things like warranty management, even procurement. There's a lot of digital and analytics that we can use to improve our productivity. That is exactly what the initiatives are. See, some of these initiatives is not that it's new, but we possibly said that we'll do it over a phased period. But COVID has actually helped ensure that we advance all of this, and that's what we have been doing over the last year or so. As far as the electric vehicle initiatives are concerned, we had already shared with you in December. All the electric vehicle initiatives will come under the organization of Switch UK, and Switch would be the visible face for the EV initiatives. But you must remember, finally, Switch is a 92% today, is a 92% subsidiary of Ashok Leyland. So it is very much Ashok Leyland, but we decided that let's have separate teams, separate initiatives, separate reach for this initiative, so that the internal combustion business and the EV business are kind of held separately and managed separately. Switch will also have India facilities here to help as a global manufacturing unit, and this facility will also cater to India and SAARC, which are becoming extremely important markets. I think that India is a market to watch out for in EVs as we move forward. There's a lot of government initiative and support that is being given for EVs, and we hope to use and benefit from that.
Gopal, great to have you today on ET Now. Thank you so much for taking the time out and speaking with us.